Well, let's get in Dipan Mehta, Director at Elixir Equities, to join us for a quick check on a lot of stocks that we can discuss. Hi, Dipan. Good morning. Dipan, what do you make of Axis Bank's numbers? You know, it appeared there was more good than bad, but how do you approach the stock from here?
Yeah, Nigel, good morning, and thank you for having me on your show. I think stellar set of numbers coming in from Axis Bank, and I think even amongst the banking peer group, its valuations also are quite attractive. So I have to say that it could be a major outperform over the next few quarters or so. It's just that the likes of Axis Bank, Kotak, HDFC, ICICI are a bit subdued because a lot of the investor and trader action has shifted to the PSU banks and the tier 2, tier 3 banks where the growth rates are similar, but valuations are more attractive. At the same time, I think more money is coming into the small mid-cap fund, which is getting focused over there. And Axis Bank having a large proportion of FII holding is also bearing the brunt of FII selling. So that's the phenomena, but I think large private sector bank like Axis Bank can be a part of a core holding and can provide stability to a portfolio and deliver long-term outperforming returns.
Okay, what about Tech Mahindra? Dipan, how are you feeling about it? I know you've had this sort of, love-hate relationship with technology stocks over the last many years, but now it's, it's very clear, right, that there is a big slowdown underway, especially for some of these names like Techem. Would you be cautious?
Yeah, Sonia, thank you. It is a love-hate relationship, and right now it is on the hate side. Very, very disappointing set of numbers. And unless you have a contrarian streak in your investing strategy, we wouldn't want to touch any of the technology stocks. I was quite positive on even mid-cap tech companies, but over there also growth rates certainly are coming off. And since it's a large industry group and with large proportion in the Sensex and Nifty, and that's where most of our portfolios are benchmarked, we need to have some allocation to tech, and that small allocation to tech we are working through the mid-cap IT stocks, the likes of Persistent Systems, Coforge, Tata Elxsi, KPIT, where numbers are still, I would say, decent. They're at least getting to that 14 to 18% type of growth rates, top line, bottom line. And that may sustain these kind of valuations as well. But other than that, large cap IT, so I don't know when the turnaround will take place. And they go back to the growth rates of 14, 15% or so. That's getting more and more difficult.
Dipan, good morning. A quick word on, something you're very familiar with, the BSE. Stock did very well yesterday, almost 1,800 now. Your thoughts?
No, I think BSE clearly now has a coherent strategy to gain market share in the options business. And it's playing out pretty well as well, to the extent that they have had the confidence to increase the transaction charges per trade in the options market. And some analysis done by us suggests that growth rates will significantly improve for BSE, could get into that 25% zone if these kind of volumes are sustained and they grow over a period of time. And of course, they have a valuable asset in the form of their 25% holding in CDSL. So on the whole, I think it's a company which seems to be entering a new growth phase. In any case, markets are strong and a lot of investors are coming to invest in equities. Certain technological and regulatory changes also have benefited BSE in the sense that every mobile or web-based trading app has to offer BSE as a trading option, which was not the case earlier. So I think a lot of effort has gone in by the BSE, and that's clearly paying off just now. And if this market continues the way it is and volumes keep growing, then I'm certain that BSE also can give decent returns going ahead.